Here's a bold statement. The way you pay taxes could be about to change dramatically, and it might just save you a significant amount of money. But here's where it gets controversial. While some taxpayers stand to benefit greatly, others might feel left out in the cold. Let's dive into the details of the higher SALT, state and local taxes, cap and what it means for you. Key takeaways. Temporary relief. The SALT tax cap has been temporarily raised under the One Big Beautiful Bill Act, OBBBA, allowing taxpayers to deduct more of their state and local taxes. This change is effective from 2025 through 2029. A shift from the past. The Tax Cuts and Jobs Act previously capped SALT deductions at $10,000, leading over 90% of taxpayers to opt for the standard deduction. The new limit of $40,000, an increase of $30,000, opens the door for many more people to itemize deductions. Marriage penalty, and this is the part most people miss. Whether you file as married jointly or as two single individuals, the deduction limit remains the same at $40,000. This means a married couple can only claim $40,000, while two single filers could each claim $40,000, potentially doubling the benefit for unmarried couples living together. Who benefits most? Taxpayers with substantial property taxes, state income taxes, or city taxes stand to gain the most. States with high tax rates, such as New York, New Jersey, and California, will see a double benefit from both property and state income tax deductions. Income thresholds. The full $40,000 deduction applies to those with adjusted gross incomes, AGI, below $500,000. Above this level, the deduction begins to phase out, and for those earning over $600,000, the cap reverts to $10,000. Pass-through entity tax, PTET, a lesser-known provision allows small business owners to deduct state income taxes related to their business directly from their business income, potentially reducing their AGI and saving on self-employment and net investment income taxes. Christine Benz, Morningstar Ed, it's great to have you here. Let's talk about this elevated SALT tax cap. It seems much more generous than the previous $10,000 limit. Can you explain what's changing? Ed Slott, absolutely, Christine. This is one of the standout benefits of the OBBBA law. While it's temporary, it's a significant opportunity for taxpayers. The new $40,000 cap is a game changer, especially for those who were previously unable to itemize deductions. But it's not just about the higher cap, it's also about the ripple effect it creates. By opening up itemized deductions, taxpayers can now maximize other deductions like charitable contributions, mortgage interest, and medical expenses. Benz, that's a great point. But what about the marriage penalty? How does that work? Slott, that's a tricky one. The $40,000 cap applies equally to married couples filing jointly and two single individuals. So, two single people living together could each claim $40,000, totaling $80,000, while a married couple is limited to $40,000. This raises a thought-provoking question. Does the tax code inadvertently favor unmarried couples? It's a point of contention that's sure to spark debate. Benz, interesting. And what about those with incomes above $500,000? Are there any strategies for them? Slott, for those hovering around the $500,000 threshold, it's worth considering ways to reduce taxable income, such as delaying Roth conversions or maximizing contributions to tax-advantaged accounts. However, for those well above $600,000, the PTET could be a lifesaver. It's a legal workaround that allows small business owners to deduct state taxes at the business level, effectively lowering their AGI and saving on multiple tax fronts. Benz, that's incredibly valuable information. It seems like this new deduction could significantly impact many households. Thanks for breaking it down, Ed. Slott, my pleasure, Christine. And remember, while this change is temporary, it's an opportunity not to be missed. But here's a question for our audience. Do you think the marriage penalty is fair, or does it need reevaluation? Let us know your thoughts in the comments below. Final thoughts. The higher SALT cap is a welcome change for many taxpayers, but it's not without its complexities and controversies. Whether you're a high earner, a small business owner, or part of a married couple, understanding these nuances could lead to substantial tax savings. Don't miss out on this temporary opportunity, and don't hesitate to join the conversation about the fairness of the tax code.